Will home prices in the San Francisco Bay Area keep going down in 2024, or have we finally hit a bottom and are prices going to go back up? These are questions that you need to know the answers to if you're a home buyer or investor in San Francisco or San Jose. And in this video, I'm going to show you the real-time data on the Bay Area housing market so you can make a more informed home buying or investment decision. And the first thing I want to do is look at how much home prices have declined in the Bay Area since the peak of the bubble in mid-2022. You can see in the San Francisco Berkeley metro, prices are down 10% from peak, while in Santa Cruz they're down 7% from peak, and in San Jose, Sunnyvale, they're only down 3% from peak. So we already have, let's call it a correction going on in the San Francisco Bay Area, as well as a crash if you zoom in on some of these urban San Francisco zip codes that have gone down by as much as 20% in value. However, here's the problem, everyone. Even with those initial declines in prices in the Bay Area, the value of houses is still insanely expensive. Vast majority of people that live in the Bay Area, they cannot afford to buy a home. They can't even afford to qualify for a mortgage. So even with these initial declines, the Bay Area is still so expensive that it's pricing a lot of buyers out of the market. Because folks, I want to show you here on Zillow what a buyer in the San Francisco area has to deal with. For instance, take a look at this, interestingly, this foreclosure. It's a 5-bed, 2-bath duplex, 2,200 square feet in San Francisco. It's on the market for $1.2 million. And it's actually not a bad looking property. It looks like it might have been renovated maybe about 10 years ago. And at this price point of 1.2 million, we can see that it's down significantly from where it was historically. It actually sold for 1.6 million in 2021, and then again for 1.6 million in 2023. So the value of this property has been cut by almost 25%. Yet, if you were to buy it with a mortgage, your monthly payment would be close to $8,000 a month. And so this is the story of the San Francisco housing market. Like, things have gotten more affordable, but they're still really, really expensive. And I think in 2024, we are going to see prices continue to drop in the San Francisco, Oakland, Berkeley area. However, in some other places in the Bay Area, I think we could see prices rise. Because for instance, if I go on Reventure app and change the data point to the Reventure app home price forecast score, we can see that the home price forecast for urban San Francisco is still low. It's a 38, indicating a buyer's market and that prices are likely still to drop. However, if we go down to Santa Clara County in San Jose, we can see this is a completely different situation. The home price forecast score is 53, indicating kind of, let's just call it a stable market, maybe even slightly above average. Maybe even prices will go up in Santa Clara County, with the principal thing driving appreciation being a shortage of inventory. In Santa Clara County, there's only 644 homes on the market for sale right now in an area with a population of 1.8 million people. So think about that, everyone. 1.8 million people, but only 644 homes for sale. I mean, that's an absurdly low level of inventory that's substantially below where it was 3 or 4 years ago. And so don't be surprised if as a result, prices in Santa Clara continue to go up, because there's actually a very important, let's just call it secular economic trend that you guys got to pay attention to as a buyer in the Bay Area market, particularly in Santa Clara County, and that's the AI boom that's going on right now. The AI boom, whether you think it's a big bubble or legit, right now it's causing lots of money and lots of demand to flow into the Bay Area economy, because the Bay Area economy is the epicenter of where all this AI research is done. Many of these companies are either located in urban San Francisco, like OpenAI, whereas other companies are out in Silicon Valley. And this AI boom is bringing more startups, bringing more money to the area, which is increasing the demand to buy houses and to rent houses. And so this little economic renaissance, it's starting to counteract the fact that so many people left the Bay Area over the last 3 or 4 years during the pandemic, and could mean that we've already kind of reached a bottom in terms of like the economic downturn. Folks, I'm going to show you what's going on right now in the Santa Clara housing market. Like, this is what we're seeing in this housing market. Like, if we zoom in and you just want to buy like the typical house in Santa Clara, you're spending millions and millions of dollars. Like this house here, it's a 3-bed, 2-bath on the market for 1.4 million. And look, it has some great landscaping. Can't argue with that. The inside has some, I think, ugly parquet flooring. I'm not a huge fan of parquet flooring. I don't know about you guys. If we keep going, yeah, I mean, this house, like if it were in Texas, oh boy, here's the kitchen. Not a fan of the kitchen. This house, if it were in Texas, would be like 300 grand. But because it's in the Bay Area, it's 1.4 million. And so this is really what buyers have to deal with. And you can see it's only been on the market for 3 days. It already has 830 views on Zillow. So, there's already some interest in a house like this, which might sound crazy to anyone who hasn't ever lived or bought in the Bay Area. And you can see if we look at this listing history, the house was previously listed for rent at $3,600 a month in late 2022 and is now listed for $1.4 million for sale. Figures that actually really don't make a lot of sense, everyone, especially if you're an investor, right? Like, how could the rent be $3,600 but the price be 1.4 million? Like, very clearly, people in Santa Clara and the Bay Area, they're not buying houses for cash flow. They're buying houses for appreciation. And this is actually one of the downsides to buying in the Bay Area. You're not really going to get cash flow. You're probably actually going to lose money if you have a mortgage on your investment property, because the cap rates are just so low. With data on Reventure app showing that the average cap rate in Santa Clara County for a rental is 1.9%, everyone. Expect a net rental income of $30,000 on a $1.6 million house. I mean, that's just really, really low. It's also low in Alameda County in Oakland, 2.4% cap rate. 2.3% cap rate in San Francisco. And so, if I'm looking as an investor, I'm looking at actually a lot of California, and I'm saying to myself, like, geez, like, it's impossible to make a return in these markets, which is one of the reasons why investors are actually selling out of California and the Bay Area. With research from Lance Lambert using data from Parcel Labs showing that the investor purchase to sale ratio in San Francisco and San Jose is like 0.12 to 0.3. Meaning, get this, folks, that about 80% more investors sell every month in San Francisco than buy. So investors net are selling out of the Bay Area, as well as Sacramento, LA, and San Diego. They're selling out heavily in these areas. And one of the reasons is because cap rates are so low, returns are so low. Another reason is because California is not a very landlord-friendly state, especially after the pandemic. I think California spooked a lot of its landlords and small property owners with some of the rules that they put in place. So the investors are continuing to sell out of the Bay Area. However, they're not selling fast enough to push inventory up to a level where prices are going to drop significantly, at least in San Jose. And that's really the thing that we need to see. If you're a buyer and investor trying to track this data to find like when the right time to buy is, or when the time where you're going to see more deals, more discounts, you got to pay attention to those inventory figures as well as the price cut figures. Because when we see more homes for sale, see more listings, and then we see more sellers reducing the price on those listings, that's the telltale sign that there's a downturn. That's the telltale sign that the market has shifted more in your favor as a buyer. I want to show you guys something here. We're back on Reventure app, and we're looking at different zip codes in San Francisco and in Oakland, and we'll look at some of these other areas also to the north here in Marin County. But pay attention to how much prices have dropped in urban San Francisco from peak. We're seeing like 19% drop in the Castro. We're seeing like an 18% drop in Soma. We're seeing big declines. And so the question is, like, with these declines already, like, how do you know if they're going to continue to drop, if these prices are going to continue to go down? And the way you know is by clicking home price forecast on Reventure app and looking at the different numbers. And if the home price forecast is below 50 or heavily below 50, that's an indication that there's still downward price pressure. Like here in this zip code here in Soma, we can see that it's still heavily a buyer's market with a score of 31. The reason it is because the days on the market is still really high. The inventory is still really high. So if we look at the days on the market, take a look at this, everyone. Houses are on the market for 45 days here in this zip code when the long-term average is 33, indicating a soft market, a buyer's market. If we look at the inventory levels, we can see there's 70 homes on the market for sale when the long-term average is 49. So we have lots of inventory. Higher inventory, higher days on the market suggests prices will still go down. Now, if we zoom out and kind of go to the East Bay, let's try to find some areas where maybe prices are still going to go up. Like this zip code here in Orinda, which is just to the east of Oakland and Emeryville. You can see its score is a 59 here, indicating that we're still in a seller's market. In this zip code in the East Bay, we were in a seller's market in 2022, then we went into a buyer's market, now we're back in a seller's market. And you ask yourself the question, like, how do you know that? Well, again, it goes down to the days on the market, the inventory, and the price cuts. we can see that the days on the market in this zip code went to 29 days, which was historically high, and it's now back down to 19. So it's now down to a really fast level. A house here sells in less than 3 weeks, while the inventory of homes for sale, before the pandemic, there was 30, 37 homes. Now there's only 12 homes for sale. So, everyone, predicting home prices in their direction over the next 6 to 12 months, it's not an exact science. I want to be clear. There's pretty big error bars around some of these projections. You have to be careful with projections. However, I'll say this, if you're a buyer investor wanting to make a more educated determination if prices are going to go up or down in your neighborhood and county, you can do that by looking at this data. Like, this data is pretty much telling you most of what you need to know about the direction of prices. And so, my mission for you guys is to be more informed when you go for your search for your house or your investment property. So, you're going to understand, are the trends up or are the trends down? Just from a quantitative data perspective, arming yourself with that knowledge is very, very powerful. Now, I also promised I would talk about North Bay here in Marin County. I know some people who are looking to buy in this area, and we can see actually that prices in the North Bay are down maybe anywhere from 8 to 11%, 8 to 11% from peak in the North Bay. And so, there's been a moderate correction here. That correction still is leaving values pretty high. Like, we can see there's zip codes here, there, where the typical value of a house is 2.1 million, 3.8 million. These values are really, really expensive. The people who are buying these houses are either working in tech and have made a lot of money in tech, or they've just lived in these houses for a really, really long time and they haven't sold. So you can see there's definitely some price downside in these areas. We can see values are about, in this zip code, 8% overvalued. So when you look at overvaluation and you see the overvalued metric above the long-term average, that suggests some price downside. Conversely, back after the last crash, 2009 to 2012, 2013, this market was very undervalued in Marin County. And so this is another metric to track, is the level of overvaluation. Interestingly, the level of overvaluation in the Bay Area is not as high as some other parts of America, due to the fact that prices have dropped by more over the last 2 years, and due to the fact that incomes have actually risen by quite a bit. And what's great on Reventure is you can actually look at this over-undervaluation metric, which compares the typical home price to the fair value home price for every zip code in America. So you could look at it in San Jose. You could look at it out in Stockton, where there's definitely heavier overvaluation out in Stockton. This was one of the pandemic boomtown areas where lots of people from the Bay Area left and fled to. I think prices here are pretty overvalued, as well as up in Sacramento. Depending on where you go in Sacramento, prices can be very, very overvalued. And so my basic kind of tutorial or advice would be, if you're a buyer and investor, make sure to track those inventory levels, make sure to track the price cut levels, see how your neighborhood is trending as far as that goes. The inventory and price cuts are way up, that's suggesting downward price pressure. Conversely, if the inventory price cuts as well as days on the market are way down, it suggests that the market's still stable or could continue to appreciate. And make sure to go on www.reventure.app and check out that data, particularly the home price forecast score, which aggregates all of those data points into one, so you can have a definitive metric which says if it's a seller's or a buyer's market. Now, to access all of that data on Reventure app, you will need to sign up as a premium member. The cost is $39 a month, which is actually fairly reasonable compared to the cost of buying some of these houses in the Bay Area as well as many parts of California. Head to www.reventure.app and hit the pricing prompt and get started on that $39 a month monthly pass, and use it for as long as you need to use it so you can make a more informed decision.